Good afternoon, all traders and serious students of the market. This is Jeff Killian for the Vector Traders Consortium, vtctraders.com. And today we're going to run through a very short, respecting everyone's Saturday's time, 20-minute presentation to discuss how you can learn how to trade like a professional. Before we get into this, a few honorable mentions here are that we've been in business for over 10 years. We've been in the educational side of the business for 10 years running. We have a well-established track record of helping people get where they need to go. We're fully transparent. We're accountable for what we do, and a major website with a plethora of information regarding trading strategies, a complete glossary of what it takes in order to make this happen. What else? Over 160 trades now recorded in real time as they were taken in the moment, real live trades, not lookbacks. For any of you that are thinking of trading for a living, trading or day trading, I would watch this entire presentation, this 20 minutes, because there is a wealth of information here that you need to know in order to make this happen the right way. So let's talk about exactly what that is. When we talk about, who is a true professional? A true professional is a highly trained person who trades on a daily basis and literally walks into the market and extracts money out and says, "Thank you very much." Now, what it takes to get to that level is obviously a lot of training, getting the right information and being able to use that information right away so that you're able to practice, you're able to get better at what you do, eventually paper trade, and then start trading minimum contracts according to your account size, and staying that course up and until you gain more confidence, more experience, and only then at that time would you increase your contract sizing according to your account size. Now know that every day, every trading day, the market is in a different environment. It's a different setup. It's a different measure of what could be possible as far as the range of the market is concerned, and where we have any real business trading short or long within that session, within an open equity session, if we're going to trade real-time futures, right? So a true professional knows the current state of that market every day, whatever they're trading, whether it's ES, YM, NQ, just stocks, ETFs, whatever it is. But the key here, people, listen to me very carefully, is to learn how to put a numbered stamp on what is the current state of the market today, and possibly for the next day or two. Anybody who tells you that they can predict where the market's going to go more than the next, few days, especially if the market is thin, doesn't have any idea how to be able to determine that with any real level of skill. And so this is what the most important thing in my mind is, because once you learn how to do this, then you move on to learning, where and when the smart money is trading. These are the largest institutions that can and move through prices from one level to another. They have the deepest pockets. They can afford to do a lot of things that you nor I can afford to do. So we need to be able to identify when and where these people are doing what they're doing, especially at major market turning points, so that we can catch, as the market turns back around, has an explosive move, either short or long, the majority of the money within 3 or 4 day span. This is what we want to do. So what we're going to do here is we're going to learn how to trade in the same direction at the same time with these people, so that we have an increased level of confidence. If you're not a high volume trader, no matter what you're trading, and you're not trading at the preferred entry prices, right? Having the smart money behind you, 100%, then I'm sorry, it's just not going to work out the same way. So these are some of the very, very basic things that you want to take a look at and understand that you're going to have to learn how to do in order to make that happen. Aside from the equipment that you'll need, If you've been trading, for a long period of time, you know that you have a high-end computer. You probably got at least 4 monitors, right? You have battery backup, APCs, or um, cyber power units, for each monitor, and a big one for your CPU. Some people, such as myself, outside of that, I have a whole house battery backup system. I mean, I wouldn't even think of getting into this business, especially at this level, without having a battery backup system that can run my office for at least a day straight, right? If the world comes to an end and there's no power, right? Cement truck hits the telephone pole, or there's a blackout, or whatever it is. Especially, you learn the hard way, in a major market sell-off or on a great day, the power goes off and you just lost thousands of dollars because you couldn't trade. So simple things. You're interested in trading, as I wrote here, but you're not sure how to plan it out. So what you're going to have to do is you're going to have to make a list of what is absolutely necessary to make it a business for yourself. This is the way we have to look at trading. It's got to be dealt with as if it is a business, because it is a business. It's no different than any other business. We have to mitigate our risk, and we have to maximize the possibilities for return, or it's just not going to work out for us. So what does this mean? It means high probability trading. Here on our end, we're very, very selective about the trades that we take. We're not interested in over trading, day trade. Day trading has a stigma attached to it where you have to trade 30, 40 times a day. That's not at all the case here. We're waiting for the trades to come to us. And this way, we don't have to prove anything to ourselves. We don't have to prove anything to the market. We don't have to prove how smart we are, right? The market has to come to us. If anybody ever gets anything out of this video that is any more important than this, which I don't think there is, well, God love you, because there isn't. You don't have to prove anything to the market. The market's got to prove to you that it's worth your emotional and monetary capital. So you want to be trained on how to identify the true high probability trades. And you're trading maybe 2, 3, 4, max 5 times a day, and that's it. And this way, you're doing your end of day analysis first, and then you're walking into real time, and you're selecting only the best of the best trades, and that is exactly what you trade. You're going to have to work with a trusted source. It's got a proven track record in professional trading education, which we do. And there's not many of us like out there, because they're all selling something, and they're not really professional traders. We all know this. So the information that's out there, the majority of it, for anybody who's been out there for a while looking around, knows that anything that's worth really, really having is going to be a little hard to find. That's the truth. So when we look at who's out there, I mean, look, for example, on their YouTube channels. Let's take a look at ours for a minute here. We have, again, over 160 real-time trades that were taken in a moment for about the past 5 years. Nobody has that kind of documentation. So this is something that's definitely on your side here. We have full mentorship programs. Anybody who's really become a professional golfer, basketball player, hockey player, professional swimmer, Mark Spitz, and won an incredible amount of gold medals. They've all had mentors work with them to groom them so that they become true professionals. Courses are good. We have one of the best, 2 of the best out there. One we'll talk about later, but the point is, if you can afford it, then you need to go get a mentor, somebody who will take you under their wing and show you exactly what to do so you cut through the chase. A lot of people say, wow, mentorship programs are between $8,000 and $15,000. Well, how many $5,000 accounts would you rather blow out and then be totally frustrated because of it and eventually quit because you never had enough information? You see, the reality of this business is that the worst thing a trader can do is actually believe and think that they have enough information when they don't. And when I say enough information, and listen to me very carefully here, I'm talking about how to find, track, and trade the smart money. How to know when the greatest sizing of contracts is coming in, how to be sure that there's institutional buying and selling coming in at exactly where your preferred entry price is. Okay, order flow, institutional, 3 different ways of looking at the same thing to be able to visually determine, verify, confirm, and then act on that actionable intelligence. This is what we have, that type of information. So there are our courses and there are mentorship programs. So the second thing is you're going to have to make a solid decision for your life, and you're going to have to follow through with it. You know, it's like one of my best friends told me a long time ago. He said, listen, sooner or later, you're going to have to decide what you're going to believe in. And then you're going to have to decide how much you're going to believe in it. Now, for me, there was never a question whether I was going to trade or not. What I had to go through, I wouldn't wish on my worst enemy. That was 30 years ago. There wasn't webinar rooms. There wasn't, full transparency. There wasn't accountability, responsibility at this level. So with that being said, when you decide to trade, it has to be a decision. You have to be a person who can make decisions for your life and follow through with them. This is the main thing. You're going to have to follow through. You've got to give it a fair chance. And especially, most importantly, is don't listen to what others are saying to you about your choices. You know yourself better than anybody. Why are you possibly going to listen to somebody and get affected by what they have to say about you or your decisions? Right? You're going to run across people. You're going to tell them, hey, I'm studying trading, and you don't even know them. They're going to say, nobody makes any money doing that. It's ridiculous, and let that affect you? No, not at all. Not at all. This happens to be my son on the left-hand side singing in front of, my screens in my trading room. So he's got a little jump on things, for sure. A lot of people don't have that opportunity. So again, these are all things that we need to take a look at, and how deeply we really want to get involved and educate ourselves so that we can get to where we need to go and start making real money, nailing down profits, on a daily basis, and living the kind of life that we want, not the kind of life that life wants to give us. These are some people who've come through the system. I want to get into some of the charts here and show you what I think are some of the most important things that you're really going to have to take a look at when you, start to analyze using technical analysis within your trading on a daily basis. Now, remember, people, whether you're trading end of day or real time, technical analysis is technical analysis. This chart happens to be an end of day chart, right? But it could very well be a 15-minute chart or a 5-minute chart or a 1-minute chart, right? The key to this whole thing is the correct application of trend lines in this case, which we had a brief video on, a back to the basics posted on YouTube just the other day, right? Where we have a point of origin and we have our connect points along the way here, 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 and then broadcast it out into the future to this area here. And you're looking for the trend line violation to the downside. Well, that's one thing. Yes, it is. Okay. Looking in retrospect, we are higher than this previous market peak that sold off intensely. 2019, remember, was a disaster for people who didn't know how to go short, didn't know how to time the market, right? And then luckily, fortunately, the market has come back. Unbelievable. What such a quick rebound. And then here is what I want you to see. A minor sell-off here, as in this one here, but in this case, a good 3-4 day run. Now, what happened here besides the trend line violation? Here's the large institutional volume that comes in on a down close for the penetration to and through the trend line on an end of day basis. So if you look at the chart pattern that's on the way up here, for example, right, you can clearly see the nice uniformity. Again, uniformity here, interlocked bars, small range stays, beautiful. Nothing like this, right? If this was a 1-minute chart, this might be considered program trading. So the prices are dripping up, dripping up, dripping up, dripping up, or say moving up, moving up, and moving up very, very slowly. And all of a sudden, the larger contract sizing comes in, as I just identified on this bar, and it happened to be right there. on 9/3. And then the market trades down. Actually, we recorded a video that's posted to YouTube on it around this time, 2 or 3 days before, that predicted this market sell-off would happen, and it sure enough did, using the techniques that we teach here. So knowing that you have the price chart pattern uniformity, it's much easier with the volume dry up before that large volume spike came in here, right? To see that these prices are trading up on inflated highs. That's something else that you're going to have to learn. We're just looking at the price action and the volumes compared to the price action, right? Okay. So this is critically important to understand how to read this, interpret this. Second, let's take a look at the money flow index here. You're going to have to learn all about divergence analysis. You will have to learn how to identify pent-up selling pressure that has not yet taken place in the form of future directional price movement, in this case to the downside, by learning how to interpret the indicator's behavior as compared to these prices. Here, very simple, straightforward, a higher peak, a lower peak. This was the highest value for the short-term money flow, institutional money tracker, as compared to this lower level, right? Lower price, higher indicator level, lower indicator level right here. Divergence analysis, and I'll pound the table on this one. I don't think there's anybody out there, I'd put money on it, that knows as much about and can disseminate that information on advanced divergence analysis outside of the VTC. We are at the top of the list on this because we know that when you incorporate the proper divergence analysis into your trading, whether again it's a 1-minute chart, 5-minute chart, it's a 15-minute chart, or an end of day analysis, which is where it all begins, then things change dramatically in the form of profitability. So after this, we want to take a look at longer term money. You need to understand how to take a good look at the relationship between longer term money and shorter term money. And so we'll look at the Chaikin money flow here. Now this is the same pattern here that we had for the market moving up on inflated highs. Remember, when you had the negative divergence on the money flow index, very clear. In this case, you don't have a negative divergence. This is a lower and then a higher peak, right? Stamped out at these price levels. Okay, that's fine. You may not get 2 negative divergences before the market falls off, but look at where the price is traded through its first level right here on this day, down again 9/3, and look at what the indicator said before that ever happened. Here's the peak and it starts to move down, right? And here it forms its own internal level here, right? And then as you move forward day by day, it's already through its own internal floor level before the prices have a chance to move to the downside, right? And then up here again, prices are up and then down, and the indicator's through the second floor that it was established by its own internal longer term money flow stamped out level. See, this is just the tip of the iceberg as far as divergence analysis is concerned, and understanding, you know, in many cases when the market continues to trade down or back up after the fact, right? After this has happened and the market takes off for a few days, or in this case, the major sell-off, the interaction between short-term money and long-term money, sometimes the short-term money will tap out, you'll get a support level, and long-term money will continue to move down. So now you're looking for a second leg, a series of days in a major market sell-off, right? Absolutely. As in the first leg, here's your second leg, right? And then third, fourth leg here. So this is critical to understand, again, the relationship and how that all plays out, how the baton gets handed off from one to the other. You know, other than that, in many cases here, here's your price chart pattern. You know, we use the stochastics momentum indicator, which is strictly price-based and calculated on the bar's close. So you can see here at this point, right, you did have, in fact, on the price-based indicator, right, another negative divergence. Here's a lower price, a higher price, and here's a higher peak and a lower peak. That's all fine and well, okay? So it's building. But after this, I mean, we're looking for the opportunity to get the crossover confirmed, and it does happen right here. Actually, there's an initial negative divergence, right? And then there's a secondary here. So this is just the icing on the cake, people, before the cross from above to below, and then obviously below the 80 level. So this is the earliest possible warning you would have had just based on the price-based indicators interpretation of this stochastics momentum index. Extremely powerful information, people. Knowing how to do this. Okay, what else? Are there any more negative divergence? Yes, there is a longer term negative divergence here. It's not a short term, it's an intermediate term. How do we define short term, intermediate, and long term? A certain amount of days is calculated within the short term, the intermediate term, and long term divergences, whether they are negative or they are positive. Obviously, the positive divergences would be set up, in some cases like this here, you had a simple cross from up below to above on the MACD. You didn't get a positive divergence as you might get on some of the other indicators, which we don't have enough time to go into. But on a lot of market turning points where the market will trade down sharply and then back up, if the price is hanging long enough, you'll get it. In this case, you got straight cross from below to above. In this case, on the sell-off, you got it right here, right? Right. You also got a negative divergence right here before the major market sell-off, as you can see right here. Higher indicator level, lower price, higher price, and then a cross from above to below. So these are some of the very basic things that any trader really needs to get under their belt. When we get as far as getting into real time out of the exit market timing session of what we're learning here and into real time to trade futures, for example, we're going to have to get set up around be done no later than say 9:15 in the morning Eastern Standard Time and be trade ready for 9:30. You're going to have absolutely positively have unfiltered data in real time. Unfiltered data is coming through every nanosecond, tick by tick, every trade. A lot of data feeds will have that data packed up, and they're going to send it out in bunches, every couple seconds. Well, that doesn't work for us because we need to have unfiltered data. This is critical to real-time trading. In stocks, end of day, ETF, stuff like that, it's not necessary. Studying the price action, again, learning when and where we have any real business, loading up trading contracts, in this case, short, the major market sell-off here, short, and then turning back around after they got to the Trump level. When he got elected, where prices bottomed out, which we also called, and trading back up again, okay? Market thins out, how am I gonna play this? There are certain daily levels that are created within here, right? That you're absolutely positively gonna have to know how to identify with in order to be able to take these and get into, laying out the daily levels by the opens and closes, all right? Every day has a different level, and that's what we want to do. We want to get in here and we want to be as forensic as we can and make sure we have all these levels correct so that, so that we make the right choices where our support and resistance levels are. And this way we're fully prepared, for anything that can happen ahead of time. Now we're just going after some of the major daily levels here. I squeezed this up because this is the most recent action drawn from Friday's close in 122, right? Okay. So here's the range on the downside. Okay, to get down here, you'd want to tighten this up and you'd want to look at this bar's up close, right, in this case, and you'd want to take that day and then go from here for another free and clear on the downside. So if the market was to trade down, you know that these are major support levels right here and here, probably a no trade zone and getting down to here. This is the very basics behind, how to identify free and clear areas where if you're going to trade in real time, you might get 2 or 3 legs out of a day on, an open equity session, 9:30 and 1 nanosecond, to trade up until maybe 11 o'clock, something like that at the latest, and then maybe come back in the afternoon if there's enough there. So what else? What else? Let's take a look at the next slide and see what we've got here. Okay. So again, this is for serious students of the market. You know, people who know that there is an incredible amount of money to be made, but they just haven't found a way to make it yet. Right? We understand, and this is exactly what we're doing. So at the end of it all, where do we go? We have a course, and it's right on the website. And when it was recorded 5 years ago, it was about $2,500. So if for people who are interested in this, is my point, who don't know a lot about trading or have had the runaround about trading, and know that they just need to get the right information and they can be successful, this is where you can start for as little as, you know, $497 as compared to $2,500 when it was recorded almost 5 years ago. Now, don't let that throw you off course. 5 years ago, the information that comes across our table to you, everything that we teach is timeless in nature and will not cancel itself out. It's applicable to any freely traded market that has enough liquidity, meaning enough participation, right? Enough price chart pattern uniformity, the volatility is right, it's doable, risk can be mitigated down to the smallest amount of money on every trade. So if it goes against you, you're right out of it before you have a chance to give any money back. You know exactly where you're going to get in. You know exactly where you're going to get out ahead of time. Your pre-planned price profit targets 1, 2, and 3, right? But if the trade goes against you, you're trained in knowing how to get the hell out of the trade before you have a chance to give too much money back. So looking at this, I would say if I was interested in trading, it's not going to get any better. This is an incredible course. It's the biggest selling course we've ever had. We just moved it down to $497 about a month and a half ago to give people the opportunity to see who we are and what we do. That's really it. I'm going to include this in your chat area. You can see this and probably click right through this link in order to be able to do this. Okay, it should be out to you. Can I get a raise of hands so I can see people can get through that link and be able to see it? There it is. The world changed a year ago. Nothing is ever going to be the same. Everybody's trying to figure out how to work from home. You know, how to make the best of the situation. Right. And so this is a viable option. This is a viable, proven alternative. If everybody was doing it, it would be easy for them, but it's not. So that's what we're about. We're about making sure you get the right information the first time. I want to thank everyone for taking their time out of the day on a Saturday, and we look forward to serving all of your educational needs from now and into the future. This is Jeff Killian for the Vector Traders Consortium. Everyone have a great weekend. Thank you.